Hi everyone, this is Asa Bailey, and today we're looking at the effect of the general elections on the stock market. It is a good time for us to look at how politics impacts the financial markets. We may not agree that the effects are direct, but I'm sure there will be some debate as to what the effects will be. What we know is that the decision made by politicians will affect many industries: the manufacturing, the retail, the service, the banking industry, and you name them. Let us look at a general pattern in the term of government. One of the most interesting numbers to look at is how the various stock indices changed over the past 4 years of our current Prime Minister's tenure. Compare 2016, 2017, what you realize 2018 our stock market was the best performing in the world. When a Prime Minister pushes for re-election and is in pursuit of a second term, there's a tendency to push through the unpopular legislations through the first 2 years. You'll see the tax, you'll see the regulations that may have a negative effect on the economy. In the last 2 years, you will see a lot of push for economic improvements leading up to the election. This 2020 election is dubbed the COVID-19 elections. A lot of people are already facing hard times, and there's much uncertainty regarding how they are going to survive. They will look to a party with experience and one they can trust to steer the economy back on track. One way the elections influence the market is dependent on which political party takes office. Some believe that it's under a Labour Party that the markets do better, and some say it's under the National Party. But think about it. Who would you say is the more pro-business party? Which party allows incentives for companies listing on a particular exchange? Could it be that the particular decisions of a government can cause a stock market to be the best stock market in the world? Elections bring uncertainty, and investors don't like uncertainty. Some persons make their money by identifying patterns in the market, and they use it to even predict the price of a stock for the short or long term. You see, when there's an election, you'll have a lot of persons getting ready to sell their stocks. They will sell with any news that seems to threaten the value of their shares. This can cause a sudden dip in the stock price, and you might end up in a situation where you have lots more sellers than buyers, more supply than demand. This is election time. People are looking at past performance. People are looking at the accomplishment of the various parties and the manifestos that are placed on the table. Well, some people are looking at the manifestos that are placed on the table. But regardless of which party wins, what will matter is the policy direction of that particular government. Their policy decision will have an impact on the financial markets. Can you imagine the policies or reforms that our next government will implement? A returning government may continue on what they have been doing. A new government may overturn things. This uncertainty may make investors nervous. Let's watch and see what happens now that elections are over. Click a like or subscribe, and let's follow these changing moments together.